Good morning, everyone. Today is Wednesday, October the 24th, and this is the SPY Outlook for that day. Here's what we have in the mix. Yesterday, once again, we made another lower low. All right, so here we are. We've got a little bit of a flag action here. Now it's a bull flag because this is the direction in which the main wave is running, but it is a flag nonetheless. And so what might the chart have on its mind, imagining it were a thing of that sort, today? Well, we do have the FOMC meeting announcement this afternoon at 2, and normally, an FOMC week, folks, is normally much more quiet than this one that we are in the midst of. But this is a very nice linear regression tool that sits inside of motive wave, and right here is a 95% confidence interval for this line, as it were, that's going through pretty much the center of the formation. And it is suggesting that bounce action is afoot. Now, regrettably for me, I'm on the short side of this, expecting that it would come in just a little further. I was expecting it to touch the baseline of all of this congestion versus the midline of the congestion. But in any case, we are bouncing. What's the order of business? Well, there's a gigantic gap. Right? Now we did step the wick into this gap. Let's take a look at a closer chart. First let's make sure that this is extended to the right. Hang on a second. Extend. All right. Let's take a look at an hourly. I know that's a bit more granular than what we normally do, but let's just take a peek at all of this. Notice CCI moving forward here, and so is the SMI. And so this is the gap that we should have some concern about. If we get here, I'll move that price range. That's the top of the gap. We certainly did slip into it, and we are making a series of higher lows and higher highs. So right inside of this formation, we have ourselves a small gap, a small reversal pattern moving, right? So the second that we get a candlestick close up over 140.195, and let's do that. Once we get that squared away, we should have ourselves a move that takes us right in through the top of the gap. Now, what happens here is going to be the real question. Are we in a space where what we are doing is retracing the larger wave? Now, here's what I mean. Let's go back to the 4-hour. Sorry to make you hop around, but it's something very, very important to consider. Here is a large wave that we just finished completing, actually part of an ABCD pattern. Now, when, as I mentioned, and I do have a tendency to be redundant sometimes, but as an educator, you find out that you have to say the same things over and over and over again to students until one day they go, "Oh yeah, that's what you mean." And so for those of you that learn with me, you know that that's positively true. And certainly it was true for me when I was trying to feed through all the sorts of information that you get when you learn to trade. So here we have this leg, and when you finish a leg like that, it is very customary to come in and make a 61.8 retracement, right? That's extremely customary. Now, if there's very strong price action afoot, it may stop at the 50, and on the rare occasion with extremely strong price action, it will not even test the 38.2. The stronger the move is to the upside, the more shallow the pullback is. when it's retracing part of the wave. So indeed, if we begin to bounce and start recovering these events, by the time we get out over here, we should have a pretty gigantic move to the upside ahead of us. That being said, we don't really have any of that right now, so we're just looking one day at a time to say, hey, listen, can I get up over this measure? The fact is, we've had a string of lower highs and a string of lower lows that is not yet broken. Although our SMIs are retracing to the upside here, this means dampening momentum, upside movement. Although that's happening, everything is still clearly negative, right? This is a custom indicator that we have down here. And that clearly shows we have negative action as well. The one fly in the ointment being that the readings there are a little bit on the low side, so we should have a pop, and indeed, that's what we're having in the pre-market. All right, so we should pop. Initially, we should think about this pop being into resistance. If it breaches resistance, then we must flip and think about things from a measure of support. The last thing I want to leave you with is the tip. It's okay to change your mind here in the market, right? Everything is relative to time frame and ranges of price. And if we break a range, we must change our mind. And it is not a matter of being flip-floppy or whatever. If a price range breaks, guess what? You're looking at something else. So the mind of the successful trader is adaptive. So be careful, watch for price breaks, understand that, like Brian Shannon says, only price pays. And if you pay attention to where those prices are in relation to the prices they made before them, you'll very, very likely chart out a path that shows you where the price can move to. Okay, and that actually is the gap event, but that wick is going to matter. All right, good luck trading today.